Hello everyone, and welcome to a new unit in our financial management series. Myself Gokul. I am working as an assistant professor in the Department of Master of Business Administration in Sri Muthukumaran Institute of Technology. Today we begin Unit 4 Dividend Policy Decisions. In Unit 3 we covered financing decisions and capital structures, how firm raise capital. Now we turn to the third major financial decisions, dividend decisions, what firms do with their profits. This is part 1 and we will cover the foundation of dividend policies. In this first part we will cover what is dividend, forms and types of dividend, what is dividend policy, factors affecting dividend policy. Let's begin with the definition. The Institute of Chartered Accountant of India defines dividend as a distribution to shareholders out of profit or reserve available for this purpose. Key points are dividends are paid only out of profit or available reserves. They represent a return to shareholders on their investment. They are not guaranteed. Companies may choose not to pay dividends. Dividends are one of the primary ways shareholders earn returns along with capital appreciation, increase in share price. Dividends can be classified in three ways on the basis of types of shares: equity dividend, preference dividend. Equity dividend is paid to the equity shareholders, varies with profit. Preference dividends paid to preference shareholders, fixed rate paid before equity. On the basis of mode of payment, cash dividend, stock dividend, bond dividend, property dividend, composite dividend. Cash dividend is most common and paid in cash. Stock dividend, bonus shares issued instead of cash. Then bond dividend, company issues its own bonds. Then property dividend, it's a distribution of assets. It's a rare dividend. Then composite dividend, combination of cash and stock. On the basis of time of payment, interim dividend, it's declared between annual general meetings. Regular dividend, paid consistently each year. Then special dividend, one time extra dividend when profit are unusually high. Then what is dividend policy? According to Weston and Brigham, dividend policy determines the division of earnings between payment to shareholders and retained earnings. Dividend policy involves three strategic decisions: retained earnings for capital investment and other purpose, then distribute earnings as dividend to shareholders, then do both, retain some, distribute some. This is a critical strategic choice. Retained earnings fund growth, dividends reward shareholders today. The right balance depends on the company's situations. Then, factors affecting dividend policy. Many factors influence a company's dividend policy. Number one is legal restriction. Company law may restrict dividend payment if capital is impaired or if profit are insufficient. Then magnitude and trend of earnings, stable and growing earnings support regular dividend. Volatile earning may lead to conservative policies. Then, third, desire and type of shareholders. Some shareholders want current income, others prefer capital gain, which means growth investors. Then, nature of industry. Stable industries utilize pay higher dividend. Volatile industries retain more earnings. Then, age of the company. Young growing companies retained earnings. Mature companies pay more dividend. Then, future financial requirements. If major investment are planned, retention is preferred. Then, taxation policy, dividend taxes versus capital gain taxes influence shareholders' preference. Then, stage of business cycle. During recessions, companies may conserve cash. Then, regularity. Once established, dividend cuts are painful. Companies prefer stable policies. Then, finally, requirement of institutional investors. Some institutions prefer regular dividend income. Then, summarizing the part one, a dividend is a distribution of profit to shareholders. Dividend comes in various forms, types like cash, stock, interim, special dividend, etc. Dividend policy determines the split between dividend and retained earnings. Many factors influence this decision legally, financially, shareholders' preference, and industry context. In That's the concludes part one of Unit 4. We have introduced dividend and dividend policy. In part two, we will dive deeper into the payout ratios, types of dividend policies, and major theories of dividend relevance and irrelevance. If you found this video helpful, means please like, share, and subscribe. Leave your questions in the comments. See you in the next part. Thank you all. Thank you for the listening. Thank you for studying with me.